Next, we'll be looking at question 2. This will look at our cash budgets taken from your September 2020 exam preparatory paper. Now, again, when we dive into cash budgets, I just want us to have an open mind, understand what cash budgets are all about. Paper 2 entirely is all about a very clear and broad understanding of the content. What are cash budgets? These, within a business, we will have our cash receipts and our cash payments, obviously, and then we try to find out what are our surplus in relation to our opening balance, and to find out then the closing balance of our cash budget. The information that's presented to us, obviously, we will go to the required section bit by bit. However, the information we are given, the actual and budgeted sales and cost of sales. Whether it's actual or budgeted, really it doesn't make a lot of a difference. You'll see when we start calculating. And then in the note there, it says 60% of total sales are for cash. So ideally, that should say the 40% is on credit, okay? And then the markup is 50% on cost. So when we buy goods, we add 50% on those goods, all right? When we buy them, it's 100%. We then add the 50, it becomes 150%. So we sell them at 150 to the general public. A debtors collection schedule has been prepared very nicely for you, which will not always be the case. They just want to find out what's happening with October, okay? But I will give you a very easy method of preparing a debtors collection schedule in a simple and straightforward manner with limited risk of making mistakes. Then you've got your debtors payment trend, how we receive monies from debtors, 10% pay in the month of sale, 70 pay the first month, 18 pay in the second month, and then the balance normally we'll write it off. And the business maintains a fixed level of stock through the monthly purchases, and 50% of total purchases are on credit purchases now, not sales. When we buy, it's split into two. The first 50% will use the cash, and then the other 50% will ask for credit when we as the business buy. Creditors are paid in the month following the month of purchase to take advantage of the 5% discount. So we just pay a month afterwards so that we can take advantage of that discount. You are also finally presented with the cash budget for the 2 months, which is September and October, and there's various Roman figures that you will need to calculate as well, 1 to 5. Now, the first question requires you to prepare the debtors collection schedule. From the information that is given to you, if I can just go back to that information, you've got actual and budgeted sales. Actual is July, August, September, October, 462,000 all the way to 438,000. You need to put all of those things in all of those months and amounts in a table. So you've got your months over there, July, August, September, October. You've got them at the top as well, going to to your right-hand side. July, August, September, October. Then you need to identify the credit sales. From the information, it says, the note there, 60% of sales are for cash. Therefore, the 40% is on credit. So those total sales, meaning it includes both credit and cash sales. It gives us the amount of total sales. Therefore, you need now to take the credit sales only, because that's where you're only going to be calculating receipts from debtors. You cannot receive from debtors if they've paid in cash, which is the 60%. Okay? So The next step is you do it, it says 10% in the first month, you put that there, that's July, 70% in the second month, 18% in the second month following the month of sale, and the balance is written off. You will see there I've just written like a dash to say we're not going to be receiving anything there in that month. So it goes with August again. You start with August, 10%, 70%, 18%, September, 10%, 70%, and then finally in October it's the 10%. Now, you've got your credit sales now in amounts, but you've now put all the information that is used to collect money in your debtors collection schedule. Now you need to convert those percentages into amounts. It's pretty easy. You just take the 184 multiplied by 184,800 multiplied by 10 and so forth. But the question only requires us to calculate the debtors collection only for October. So that's where we're going to collect, we will calculate. So it's the 158,400 times 18, 148,800 times 70, 175,200 times 10, and that gives us a balance of 150,192 rands. If they want for September, you can just do the same exercise as in October. If they want for August, you can do the same exercise. If you are required only to prepare the entire debtors collection schedule, which more often than not, that's what they normally ask. If you have to prepare the entire debtors collection schedule, and they say prepare it maybe for August and September, you will still present the entire information so that you minimize your risk of making a mistake, of missing your collections. And then you just, when you go and write it in your answer sheet, you just ignore the other months that are not asked. For example, if you're being asked for August and September, you'll just convert all the percentages for August and September and tally those, and then it will give you the collection for the month. All right. Now calculate the amount of bad debts that will be written off in October 2020. You remember that amount in July where I put in a dash over there. It's the 10, it's the 70, it's the 18. That gives us 98%. So 98% will be collected, which means that the 2% will be written off. So you take the 184,000, the amount of credit sales, multiplied by the 2% that will possibly not collect. Okay, now the owner wants to improve the collection of debtors. Mention 2 strategies. Again, this question comes back. It was there on your September 2019. It's coming back again in your September 2020. What are the strategies that could be used to collect from debtors? Day 1, 2, I've given you all 5. You can issue monthly statements, send reminders, offer discounts, charge interest on overdue accounts, and stop selling on credit to people who have overdue accounts. Okay? Now, you are now required to calculate the missing figures indicated by Roman figure 1 to 5. You will see over there in your cash budget that is presented, you've got your Roman figures, cash sales, cash purchases of trading stock, and so forth. So you just need to then look at the information that is given to you. I can also just have that information that is given to you, and then you calculate accordingly. The first one is easy. The question requires us to just calculate the cash sales for September. All right, the cash sales for September is the 60% of cash sales. So you take your 372,000 Your 372,000 is your total sales for September for that month, and the 60% is cash. You get your 223,200 rands. All right. Now the next one is a little bit tricky. Where Roman figure 2, you need to calculate the cash purchases of the trading stock, and you are required to calculate the cash purchases for October. There's a calculation that you need to do there. If you can see at the bottom of my workings, I have a small table there where I've got my months, my sales, and my purchases or inventory. You've got your total sales, obviously. So the total sales for October is 438,000. Now you want to calculate how much that relates to purchases. You will say 438,000 multiplied by the 100, divide by 150. You will remember that our markup is 50%, so it is 150 that we are dividing by. The 100% obviously represents the amount of stock, or rather the amount that we used to purchase the stock. But the 438 represent the amount of stock that we use plus the 50%. So hence you are dividing by 150. If it's 25, you will divide by 125. If it's 45, the markup, it's going to be 145. It will not always be 50. It's just a matter of, you need to remember to divide what that total sales represent. It represents the cost plus markup. Cost is 100, the markup is 50, therefore it's 150. So it's 292,000. So you take the 292,000 and it's just the 50%. That's the cash purchases. 50% are of the cash purchases. That's your Roman, that's number E. It says 50% of total purchases are on credit and the other 50% is on cash. So you calculate the cash purchase, which is 50%, 146,000. The next one now is they want the payments to creditors. You do the same exercise. You get your sales of 396. Now, one person would ask, why 396 when we want the August the August one? So you take your 396 multiply by when we asked for September. Okay, so when we are in September, it means that we are paying for purchases that pertains to August, because in instruction E, it says creditors are paid in a month following the month of purchase. So the other 50%, which is on credit, will be paid a month after we've made that purchase. We're going to make the purchase this month, but we'll pay the 50% in the following month, the one that is on credit. The one that is in cash, we pay it today. The one that is in credit, we paid the following month. Hence, we go back then to August and we say, August, what was your sales? Your sales is sitting at 396,000. So we want to find out now the purchases, which is 264,000. Then you multiply by the 50%, because the 264 represents the entire purchases for that month. But the one is 50% cash and then the other one is 50% credit. So you want the ones that are 50% credit. And therefore that's going to give us 132,000. Then you multiply by 95%, meaning you have deducted the discount that we're going to take advantage of. Another way of doing it is you can say 132,000 multiplied by the 5%, then you get that answer, which means you need to go back then to the 132,000, deduct that 5%. But it just makes your life easy to say, okay, I've got 100%, that I need to pay, but I'm being given a 5% discount. So I'm ideally paying a 95%. So you just multiply by 95, and that gives us 125,400. Number 4, you are asked for the bank at the beginning of the month in October. That comes from, obviously, from the bank at the end of the month in September. So it's given in brackets. And then last but not least, you just calculate as normal, meaning your cash surplus, and then you deduct your bank at the beginning of the month to arrive at 25,000 rand. Okay, it is a pretty simple to work around this. If again, it all boils down to the understanding. That's what you need. You need to have a clear understanding of what's happening with your cash receipts, what's happening with your cash payments, and then last but not least, follow the instruction to the T. Meaning, if they say we have 50% purchases which are cash, the other 50% is on credit, you will need to follow that instruction. If they are saying debtors, 10% pay in the month of sale, 10% the following month, 70% in the following month, 18% in that other month, you will need to follow that instruction. A cash budget is pretty simple and straightforward if you just understand what the instruction requires and then just follow that instruction. Now, the rent will be increased on 1 October 2020. Calculate the percentage increase. First step that you need to do is you need to find what's the difference. Where is it moving from and where is it going to? Okay, and it's moving from 5,500 rands to 6,160. It's an increase of 660, and then you divide by 5,500 rand to get a percentage increase, because that's what the question is requiring, a percentage increase of 12%. Okay, interest on loan is paid on the last day of each month and is not capitalized. When we say it's not capitalized, it means that the interest is not added into our capital portion of loan. The capital portion is the amount that you would have taken out, you would have received. If you went out let's say to the bank and you asked for 20,000, that's the capital portion. And then the bank will then charge you interest on the capital, on the 20,000. If they're saying we're going to charge you 10%, they will calculate it on the capital portion, which is the 20,000. So now you need to calculate the loan balance. They want now the capital amount, the balance of loan. But what you are given is the interest. So your point of departure is the interest. Your interest is 1,875, multiply by the 100, and then divide by 15. 15 is the percentage of interest of loan. So you want the interest of this, or rather the capital amount for the month of this 15% interest that's being charged. They are charging you 1,875 per month. And then the next thing is you need to do, because that answer alone will give you the capital for the month. Then you need to multiply it by 12 to get 150,000, which is the entire capital portion for the year. Give reasons for the entry for fixed deposit of 44,000 in October 2020. If you can see that 44,000 is sitting in our cash receipts, and it is a fixed deposit. That means we had initially invested that 44,000. Now it has matured. We've reached the end of the fixed deposit period. And wherever we would have invested that 44,000, they are deciding to then give us the money back. So hence it becomes a cash receipt. So the fixed deposit of 44,000 matured during October 2020, and the amount was paid into the business's bank account. Question 3, we'll look at cost accounting. This is when in a business setting, basically we manufacturing goods, and there's various other things that go into manufacturing. It is material, it is labor, it is all the other overheads or expenses that go with us having to manufacture our goods, the like of electricity, it could be the rent of the inventory and of the factory and so forth. All of that, you will need to account for all of that in order to find out how much is it costing me to manufacture X goods or Y goods, okay? So that you can arrive at the cost of having to manufacture those goods, all right? This question is taken from your 2020 September examination preparatory paper. You are presented with information. There's questions, the required section, obviously. We'll break that down as we go along. The information that is presented to you, you've got your stock balances of raw material and work in progress. You've got your raw material, which was, it says that it was purchased only on credit, and invoices totaling 723,600 Rand were issued to the, for the financial year. The business employs 5 factory workers with the following conditions. They must work 8 hours normal time per day for 5 days a week, 48 weeks in a year, and they must produce 2 jerseys in an hour during normal and overtime. Details relating to total number of hours worked by workers and remuneration rates for the financial year ended is presented. You've got your normal and overtime. Also, you must note that employers' contribution is 11.5 of normal wage. That needs to be taken into account when you are calculating your labor costs. And then your factory overhead costs for the financial year amount to 107,688. And then additional information is that the business produced 22,400 jerseys during the year at the unit cost of 60 Rand per jersey. Now, the first question requires us to calculate the direct material cost together with the direct labor cost. Now, those two things are directly attributable to us having to manufacture the goods that we are trying to manufacture. It's the direct material. It could be the material that you can physically see. If you are building a table, it's going to be the wood that you see on the table, the metal around the table, any other material that is directly attributable to you having to build or manufacture that table. Direct labor cost, again, it's the costs that are directly attributable in that table having to move from one point to the next. And those two are our primary costs. We call them primary because they are directly related to us having to manufacture certain goods. So you've got your opening stock, which is 105,200 Rand. That's on the 1st of July. It's given under the stock balances. From your opening stock, you then have your purchases that we've made, and then you'll have your closing stock, which you deduct, obviously. And then that should give you the material that we've issued to the factory. So the material that has been used by a factory in manufacturing whatever that we are manufacturing. And it costs 524,250. The next thing you need to do now is to calculate the direct labor costs. And you've got your normal time. Your normal time is 1,680 hours per worker, multiplied by the rate of 47 Rand per hour. And then the number of workers is 5 of them. That gives us 394,800 Rand. The overtime is given at 541,440. Now, you need to calculate how much is the employer contributing as the employer, how much are we contributing to this? So you then, it's going to be 394,800 rand. You use normal hours, not overtime, multiplied by the 11.5. So the employer's contribution is 11.5 of normal wage, and that gives us 45,402, and the total of direct labor costs is 981,642. The next question then asks you to prepare the production cost statement. Production cost statement ideally shows all the costs that went into having to manufacture a certain goods. It's the direct material, your direct labor, which we've already calculated, of 424 and 981. That gives us your primary cost of 1,505,892. Then you've got your factory overhead, which is given as well under D. That's 107,688. That gives us your total manufacturing cost. Your total manufacturing cost as the total of primary costs together with your overhead costs. Overhead, we said these are just expenses that are incurred in you having to manufacture a certain product. Then you have your opening work in progress of 22,400 given in stock balances. Then you also are given the total of cost of production of finished goods, and that's 22,000 multiplied by 60. You remember how much it costs us to manufacture each jersey, the 22,400 jerseys that we manufactured during the financial year. The unit cost of each jersey is 60 Rand. So that is the closing or the total cost of production of finished goods, because you have one jersey and it costed 60 Rand to manufacture this jersey. You have the final product already and you have 22,400 of them, and you can directly calculate to say, I have 22,400, it cost me 60 Rand, and that's the total cost of production of the finished goods. Now the balancing figure would be the work in progress, the ones that are still going through the process of being manufactured. That would be your balancing figure. Now the next question requires us to then identify two separate problems relating to the supervision of workers, quote figures to support your answer. Problem number one that we can identify is that the workers do not work hours according to the employment condition. The condition is very clear, is that they must work 8 hours of normal time per day for 5 days a week, 48 weeks a year, and they must produce 2 jerseys. They work 1,680 instead of 1,920 hours. Or the workers worked too much overtime as compared to normal time. Okay, 70% to be exact. So at 1,152 over 1,680. Now, the possible solution to that is workers should be monitored to ensure they work the correct number of hours. Also, workers must work the correct number of time before booking overtime. Obviously, everybody wants to work overtime. It pays extra, sometimes relatively even double the normal time. However, they need to start working their normal time that we pay them for before they can, before it necessitates for them to actually work overtime. The level of production is too low for the 2,832 hours, that's problem number 2, hours worked. They should have produced a total number of 28,320. That is 2,832 times 5 times 2 per employee, 5 employees and 2 jerseys. but the business only produced 22,400 jerseys, and that's given under E. So monitor workers to ensure they produce 2 jerseys per hour as per stipulation. They need to produce 2 jerseys per each hour that we pay them for. So they need to stick to that and produce those 2 jerseys per hour. And also pay workers pay each jersey completed. That could be another thing. If we pay you to produce 2, if we expect you to produce 2 jerseys per hour, ideally we should actually be paying per each jersey that you complete. Okay, and then now we look at the next question, which is 3.2. It is more cost volume profit analysis, where you now make all this analysis to say, are my costs justifying the volumes of production and so forth, all right? So Mnandi Manufacturers is a manufacturing business that produces one type of health bars. The financial year ended on 30 July 2020. Production is based on orders received, therefore there are no work in progress. You are required to calculate the break-even point and also to consider if the level of production to be satisfactory and explain quoting answers. The information is given obviously over there. You are given your fixed cost, variable cost, direct material, labor, selling and distribution costs, selling price per unit, number of units produced, and obviously we are required to calculate the break-even point, hence the question mark over there. So now, when we calculate the break-even point, we need to understand what are we calculating first of all. The break-even point is a point where a business is neither making a profit or a loss. It means that really what we now, the amount of units that we've sold really are equivalent to what we've used to produce those units. So we neither making a profit or a loss. We cannot say we've made X amount of profit, but we can also not complain and say we've made a loss. There's a formula. You need to know that formula. It may not necessarily be given in your question paper, but you need to know the formula of how to calculate the break-even point. It was asked again last year, the calculation of the break-even point. So it is fixed assets over your contribution margin. Your contribution margin is your selling price per unit minus your variable costs per unit. Okay? Again, it's going to be selling price minus your variable cost per unit. All right? That gives you your contribution margin. You've got your fixed costs over there. They are given at 278,400 rand. They are given right there on the total, the first one on fixed costs. If you go back, right there, fixed cost 278,400. Okay, and then your selling price is given at the 3 last column, gives you the selling price per unit. So whatever product that we're manufacturing, how much are we selling it per unit? Each unit of goods that we're selling, how much are we selling it for? We're selling it for 15 Rand 50, and then the variable cost are those costs that change per production. The more we produce, the more those costs are going to be. The less we produce, relatively, the less those costs will be. So they change with production, the unit of production. And that's 11 Rand 75 cents. So that gives us 74,240 units we need to produce in order to neither make a profit or a loss. Okay, that's the point. That's the number of units that we need to be in a position to produce. Now, do you consider the level of production to be satisfactory or not? Explain by quoting figures to support your opinion. Now, the business produced and sold 21,760 units, more than the break-even point. That's a good enough profit. They have reached their break-even point of 74,240. They even went way above and they sold 96,000. So the point when they start making, selling, rather selling more than the break-even point, that's where the profit starts coming in. All right. As we said, when we calculated the 74,240, we said we need to sell those units in order to break even. We're not going to complain about the costs, but we're not going to be happy that we made any profit. We're just at the same point as if we haven't done anything. But once you start moving from that point, then you start making profits. Also, the business produced 12,000 units more than in 2017, meaning in 2017 we only produced 84,000 units, but this year we produced 96,000 units, while the break-even point increased by 13,979 units, which clearly shows that the business is doing quite well. Now, the owner is concerned about the management of variable costs, those costs that change with production. Identify one problem regarding the variable costs and quote the appropriate figures to support your answer, and also provide 2 solutions to the problem. The first one for a problem is raw material cost increased. It used to cost us R3.90 to acquire our raw material, but now it's R5.40. So it is a 38% increase to how much now we have to spend in order to acquire our raw material. Also, now what we need to do to provide the solutions, you need to monitor the production techniques to minimize the wastage. So the wastage is the amount of raw material that really necessarily doesn't get to the finished, to be in the finished part of the product. All the breakages and the other material that gets lost in the production. You need to make sure that there are proper controls to ensure that they move from the beginning of the of production and they are going through all the way to the end with minimal wastages. Train workers to be more efficient. A more efficient worker means that more production, and more production, more units available for sale. And more units available for sale is obviously more possible profits for you. Buy in bulk and take advantage of discounts. You know yourself, if you buy in bulk, you will be reducing costs exponentially, in a sense that you are able to be offered discounts because you are buying in bulk, and you also are able to take off various other advantages that come with buying in bulk. Look for local suppliers in order to reduce your transport costs, all right? If there are any other costs that you can go without, by all means try and eliminate those costs, the likes of transport costs. Seek a supplier that's down the road for you, instead of having to pay exorbitant amount of transport costs, then you will reduce your transport costs. That brings us to the end of our paper 2. I would like to say thank you for watching. Thank you to the University of KwaZulu-Natal, the College of Law and Management, School of Accounting and Economics. I would like to wish you the best of luck running up to your exam. I do want to emphasize that when you get to your exam, please make sure that you read all your instructions very, very carefully. Ask if you do not understand, because you don't want to find yourself in a situation where you find that you've done something wrong only after you've left the examination venue. Manage your time, very important. weigh your options, where you're going to get marks more versus what is it that you know more. You need to make all those constant decisions continuously in order to obtain as many marks as possible from each examination paper. And also be in a good frame of mind. Lastly, believe in yourself that you're going to do it, and then just go out there and do it. If you can believe that I'm going in there and I'm going to write my paper 1, I know my stuff, I'm going to pass that paper, you will definitely pass it. If you move on to paper 2, you believe in yourself, it's all in the mind, you've got a very clear mind, you are aware of your surrounding, you will go into paper 2 and pass it. Again, all the best.